Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking equities and the E-mini S&P. Still in that wait and see mode as we kind of trade between the 50 and the 100-day moving average. Recall we made those lows not too long ago, and the market has struggled to kind of recapture that all-time high theme that we've been seeing and trading on for so long. If you go back even over the last few years, every dip, no matter how big or how long it sustained, it was bought and the market returned back to that trending higher mode. And we just haven't seen that yet. It doesn't mean it's not going to be there. I think there's just a little bit more caution. We've got Jackson Hole here. We've got some other things on the calendar that are going to keep equities from maybe bouncing back quickly, but ultimately that should occur as time progresses. And if you look at what's happening in the VIX, remember we not too long ago saw the VIX spike up to near year-to-date highs, and we immediately came back off. And I think that right now volatility, while it's off the lows, off the year-to-date lows, and even a little bit higher on the week, is not showing any fear. This is not a fear-based trade in equities. If you look at some of the other outstanding commodities, whether it's currencies or metals or rates even, I think you start to see a little bit of fear and concern, but you don't see that in equities, and we're not seeing that, and I think that's going to continue as well. And when we talk about what's going on this week, yes, it's all about Jackson Hole and the symposium, and we've got central bankers from all over the world talking, but what about after Jackson Hole? What is the focus then? And I think that if you look after Jackson Hole, two things really come to mind. One will be the debt ceiling debate, which is certainly going to take some of the attention away from equities, and second is going to be tax reform. If you go back to November of 16, shortly after the election and the equity rally, it was all about tax reform. How are we going to save money, put more money in the hands of the consumers, bring money home from overseas? There's a lot of simplification that was going to be done, and it was going to make things easier, and it was going to make money flow more easily. And I think that from a corporate standpoint, it was going to make profits a little bit fatter, and that was the reason why we did see shares just immediately go higher. And then it's been a trending straight move higher, like I said, with modest pullbacks that were quickly bought because that tax reform is still coming, right? I think that's going to be a key when you've got a lot of uncertainty and dark clouds over Washington, with a lot of he said, she said, and a lot of finger pointing, and no real results to show for it. I think that's going to be got to be a concern, and we'll get a preview of that via the debt ceiling, how they resolve that. But secondly, the tax reform is really going to be center stage. It is really the ultimate driver of the stock rally we've seen for the last 9 months. And if they can't get that through, then that is going to be a real pitfall, and you're going to see the VIX index spike, and you're going to see the equity indices fall off. I don't think they're going to go completely bonkers, but you certainly will see a more of a sell-off than we've seen since this rally began back in November. So caution in equities, but still very bullish. We'll have to wait and see what happens after Jackson Hole to see that next rally. This is Todd Colvin coming to you from the floor of the CME Group.